Delano, I know you're looking at something that's coming up this week. That's NVIDIA earnings. We've been talking quite a bit about this. We're going to show a graphic we'll probably continue to show throughout this show and even tomorrow. NVIDIA, big weighting in the S&P, about 6% of the S&P, about 7.5% of the NASDAQ 100. The implied volatility after earnings, our CNBC data team says it's a plus or minus move of 10%. So, Delano, how are you seeing this earnings report? Are you positioning ahead of it? If you're an investor, do you need to make moves to prepare for this possible level of volatility?
I think what we looked at was late July, early August. We saw the NVIDIA come down about 35% from its highs of 140. And I think if you're looking at it from a good entry point, around $90 to $100 was a good entry point. And that's where we took a little bit of action there. I think right now we want to hold through earnings. I think they will perform well. If you look at over the last 2 quarters, they've done really well on earnings, despite being at some points supply constrained. I think there's still some upside room there, but we like the position right now where we're holding. We do see long-term value in NVIDIA and the growth into their valuation. But right now we like our position.
Callie, how are you seeing this NVIDIA earnings report? A lot of people, including Dan Ives here on the show last week, have a lot of confidence about NVIDIA not only meeting these sky-high expectations, but also beating it, and that beat actually translating to gains in the rest of the tech sector. Agree or disagree with that idea that we're in a setup for NVIDIA not only to beat, but other tech names getting a benefit from that beat?
The expectations are definitely high. And at Ritholtz, we look at stocks more on a sector level than a single name level. But hey, I'm one of those people who sits and marvels at NVIDIA quarter after quarter from the sidelines. So yes, expectations are quite high. Tech has been a victim of its own success this earnings season. But, NVIDIA, if anybody's going to pull a rabbit out of the hat, it tends to be NVIDIA. I think investors are going to focus more on management commentary after the fact. I mean, hey, I would love to see a sales beat and an earnings beat, but I think management commentary is especially important in this quarter, now that the AI story is cooling off a bit.
So you say the AI story is cooling off a bit. If you look last week, the Mag 7 not doing as well as the S&P, not doing as well as the equal weight, but still having a very strong week. If it's cooling off, what sectors, Callie, do you think are actually heating up right now? Where would you want to put money to work?
Well, I want to be clear, first of all. I mean, the AI story is still quite compelling. It's just the expectations are still also quite high right now. So, as rates come down, as the Fed signals a cut in September, but this cut still looks celebratory, meaning that the economy could continue to grow if the Fed is able to save this expansion. I think that there are compelling opportunities outside of tech. And right now, with rates still quite high, but coming lower, investors are being selective. They're looking at other sectors outside of tech after a spectacular first half of the year for tech. So I'm thinking about small caps. I'm thinking about rate sensitive sectors. I'm essentially thinking about pretty much everything else outside of tech. But this is good news. This is the bull market waking up. And it's especially good if you're one of those investors who hasn't felt like the bull market has benefited their portfolio.
And now the attention will turn to really the leader of what we've seen in a lot of tech, NVIDIA. The AI chip maker set to report results on Wednesday after the closing bell. Stock added 4% on Friday, is now up over 160% for the year, and also near a high. We know it's a T word. Are we back?
3.2 trillion?
3.2.
Yeah.
Next up, I guess 4.
We got 3 stocks around 3.2 at $3.3 trillion. So it's $10 trillion in the top 3 stocks.
No problem.
And we have all those vignettes today of people who had gotten into NVIDIA early and are, going to Disney World or whatnot with their gains.
And they are true believers, for sure. And look, it's gone sideways for 2.5 months. So we'll see if it's coiled up for something as we get the earnings.
Welcome back. This is the week investors have been waiting for since the August market sell-off. Yes, NVIDIA will report earnings on Wednesday after the market closes. The company is expected to address the Blackwell delay issue on the call. Joining us now to talk about NVIDIA and how that can impact big tech and overall market sentiment is Gene Munster, Deepwater Asset Management Managing Partner. Gene, thank you for being here. Important big week. You think the odds are skewed that NVIDIA actually trades down on earnings. Why is that?
Well, you hit the pressure point right out of the gate there, and that is, of course, related to this Blackwell delay. Last quarter, Jensen Huang said that they're going to have a lot of Blackwell demand. a lot of Blackwell revenue, specifically in calendar 24, and I suspect that that's going to be modest revenue. We're talking about a 3-month delay, and ultimately I think that for investors who are just hyper-focused on every minute of what this company is doing, that could be viewed as a slight negative. Also keep in mind the stock is up 30% over the last 3 weeks, just shy of 5% of its all-time highs. And so there's just a ton of noise around the quarter, but I think this Blackwell piece is probably the most important X factor about the quarter. And so that's kind of why I think that the stock is going to trade down modestly, but I don't think that stock action should be representative of the opportunity NVIDIA over the next couple of years.
So, I mean, this is a company that does have a history of over-delivering, regardless of the promises it makes. Do you think this time will be different? And if so, if it does trade down, do you think the knock-on effect for other big tech names could be even more sizable in magnitude?
I think that's the risk this week, of course, and just to zero in on the next 5 days is that the market is going to be, this is the only thing that matters to the AI trade this week. It's obviously the biggest factor in general, but of course with the earnings. And so, yes, I think that if there is a modest pullback, I think if there's anything around Blackwell, I think that that could be perceived as a negative for kind of broader tech, that especially the mega caps that have enjoyed some of this AI movement here. I still think we're very early in this, but again, I want to frame in that I think that trading in the near term doesn't impact what's ultimately going to happen. And I think that investors are going to get hyper-focused this week, but it's ultimately going to probably miss what I still believe is the biggest opportunity we've seen in 20 years. I still think that we are in the early innings of a 3 to 5 year tech bull market that's powered by AI. And I think that many of these big tech companies are going to do well over the next couple of years as that starts to go. So yes, I think this is going to be probably a more difficult week for broader big tech, but I think that ultimately shares are going to recover quickly as investors come to grips with, I think, is a stronger AI trade than what many believe is today.
Gene, one of the stories that seems in play in terms of why there was such great outperformance among the NASDAQ 100 type stocks going into mid-year was this scarcity of earnings growth, and they obviously had these reliable growth paths ahead of them, and now it's broadened out. The rest of the market is actually clicking back toward positive earnings growth. You saw the equal-weighted S&P now outperforming the NASDAQ 100, and it seems as if it's through no fault of their own. Maybe they're just not the preferred trade anymore. Is that something that you think it can persist, or do you essentially still see kind of a tech bubble brewing up ahead?
I think we're still very early, and just to kind of put into context, we talked a lot about the quarter, about the stock action around NVIDIA, and this gets to kind of the broader theme. I think that the most important part about the NVIDIA quarter, I just want to go back to that 1 minute because I think it's important relative to the overall conversation, is Jensen's comments about what's going to happen with demand over the next 1-2 years. 2 quarters ago, he said they have more demand than they can supply through the end of this year. Last quarter, he said well into 2025. If he continues to reiterate that the demand has continued to be more favorable, which I believe that he will do that, if he continues to reiterate that they have more demand than supply, I think that investors, awareness of the substance of what's going to happen is going to continue to be illuminated. And ultimately, I think that that these companies are going to continue to do very well. Take Apple, for example. I think that ultimately they can earn $8-9 kind of in the next by 2026, and I think that that's well higher than what many think. So, Mike, I believe that this is just a fundamental, there's a lot of awareness around AI, but I think that the significance of what it's going to do is still underappreciated by the market.
Gene, we had Bradley Tusk of Tusk Ventures on Fast Money last week, and he talked about the venture market for AI and how startups with that AI bend aren't getting the pie-in-the-sky valuations that they had been getting. There's been a demonstrable slowdown and a reset of valuations. And I'm just curious how that translates to the public markets, do you think, in terms of incremental dollars still seeking AI plays and just the overall story nature of AI at this point in the cycle?
So on the public side, we're still in this hardware phase. The software phase largely still hasn't taken root. That is largely going on in the private markets. I think some of these foundational, these ordained private companies, at Deepwater, we also invest in private companies. We have a venture arm. And so we're seeing what you're talking about, but we think some of the best opportunities in software are on the private side. We'll see those companies go public in 1 or 2 years. But to answer your question is that I think that the focus of investors related to AI and the public markets should be around the duration of what this hardware trade is going to look like. And if you look at NVIDIA's growth rates, it's 100% in 24, it goes to 40%, down to 15% in calendar 26. So essentially hitting the wall. I think that they're going to exceed that, and I think you're going to see across the board. We also own like Micron, for example. So I think that this hardware trade, even though there is a deceleration factor to it, I believe that the street will exceed those estimates. And I'm looking forward separately to this crop in a couple of years of these new private companies that are going to, I think, get really that public investors will be really excited about.
Was that maybe there's an expectation that things are going to be a very good soft landing, but it's being countered, David, by the overemphasis of NVIDIA.
Yeah.
I mean, you go from Friday, Jackson Hole, okay, well, we passed that test, to then we go to the NVIDIA test. I think we have to end the tests. I think we have to just say, look, that NVIDIA, even though it's 6% of the S&P, 7% of the NASDAQ 100, is not so important that it can derail an AI revolution.
But it is that important to the market.
Why? Because it has a 10% plus or minus?
7%, but it has an impact on so many of the other companies, of course, that are all wrapped into the basic thesis that did power our market higher earlier this year for a period of months. And we should say, obviously, it's last week Jackson Hole. This week it is all about NVIDIA.
Well,
in terms
okay,
of
so we have
the quarterly results. We do get them again after the bell on Wednesday.
Yes, we do.
Which gives us even 2 more days to talk about it.
Well, we can start now. There are two people in NVIDIA that matter. There's Jensen Huang, CEO, and then there's the amazing CFO, Colette Kress.
Yes.
You will have so much cash after this quarter that the deployment of cash may matter. Now, I happen to think that one of the reasons why Apple went from 200 to 220 is a recognition that the buyback would be accelerated. It's not talked about much, but it happened, and it is happening. I think that Colette Kress says, listen, we have so much money that we have to start buying back a huge part of our float. That would be very bullish. Jensen, I think, has to talk about how it didn't really matter that Blackwell was somewhat delayed because there are more customers than ever. In the meantime, the H200, which is a very high margin product, will help them. Now, one of the things that's great is David, you don't do fantasy.
I don't do fantasy, no.
Okay,
I'm a purist.
I live in a fantasy world.
I'm a purist. I like to watch the teams I like, and I don't like to be thinking about the other team's player who I may have in my fantasy team doing better against my team. So
my reality is subpar. So I have an alternate reality that's much more fun.
Okay. And bring us into your alternate reality,
okay,
Jim.
My alternate reality is that Ben Righteous, who I've now become, I go back and forth with him, don't get anything in.
Ben, you want to tell people who this gentleman is?
Ben Righteous is the CEO from Melius, who the company takes very seriously.
Okay.
And anyone who watches him and reads him knows that he's a serious practitioner of the game, as was his father.
So he's a serious analyst who covers NVIDIA.
Yeah, his father was when he ruled the chemical industry.
Right.
And he says he does what's called a triple Lindy. He says you have to do a triple Lindy. It harks back to the Olympics. And he says that you need to beat $2 billion this quarter. You need a guide up of $2 billion. And then you have to have, this is really fabulous, say enough to imply that Q4 grows by another $2 billion. So it's $2 billion, $2 billion, $2 billion. Thank you, Ben, who is, I think, the best at the whisper, which obviously matters to people at home, meaning that there's a kind of a sub rosa effort to be able to say this is what needs to be done. I like this, and the reason I like it is because this is where Jensen can blow things away.
Again, so the idea that you need an upside guidance of $2 billion on top of whatever, so it's $34 billion or so?
Right. Now, remember, $2 billion is huge. I mean, even if Apple were to report and there was $2 billion upside, people would say, wow, I guess it's a new cycle. We got to start buying. I think that what will happen is that you'll hear about, could you stop that with the wire?
They have wires.
Stop it with the darn wire. I'm like trying to focus.
It gets caught in your feet.
Well, the sneakers you wear, which not even, are they Nike? What are you wearing? Hoka?
Yeah, I got that.
Okay, there we go. We're going to get to Nike, and you're wearing Hoka, so I didn't know you were going to demonstrate proficiency. But I do think that Jensen, if he talks about the more than $2 billion,
Yes.
we are all going to say, okay, not blowout, but good enough to keep it here or take it up a little. I know that's boring. I know that's an incremental. But that's why I'm saying maybe the whole focus on NVIDIA is not leaving any room for the idea that, hey, it's a little better than expected. Mm-hmm. So there's the $2 billion. You got the $2 billion number. Now, Ben has been very good at predicting what's expected. And by the way, he does a triple Indy. He has one of my favorite movies. He has a picture of Rodney Dangerfield in Back to School.
Yep.
Doing a triple Indy.
Oh, of course.
Extraordinary.
It was a great moment in film.
Extraordinary.
Yes.
I think what I would regard as artistry.
Yes.
Ben Ranches.
Yes.
Artistry.
A lot of this will be dependent, of course, on the continued growth of data centers.
Yes.
At a rapid rate.
Oh, yeah. I mean, one of the things he does...
I do wonder longer term, Jim, and we haven't had this conversation in a bit of time in terms of just the development of AI and where things stand in data centers. We talk often about power. I don't know when that day is coming, that they're truly going to be constrained, but what may well come.
Blackwell
and
must
that is
be
going
cool.
to, that's going to be something we're talking about a lot when we see the first signs of it.
David, that is so strong. And what people don't understand is there are whole regions of the country that are maxed out. They can't build data centers anymore until there's more, the grid is updated. And I think there's a lot of, like the Southeast, the grid seems to be overwhelmed, particularly, by the way, in the Maryland, Virginia area. There is a chart.
Although every time I bring on the person who runs the utilities or a head of a big utility, last week I had ERCOT, the Texas, and they're very confident. Their projections are stunning in terms of how much power is going to need to be increased availability over the next 4 years.
They better be confident.
And yet they seem to be confident they can meet this incredibly growing demand. But there are many others, Jim, who believe that will not be the case, and that will be the first break on sort of this overall demand.
I want to stay focused on it because Alphabet, according to Melius, plus 91% growth in CapEx. Cloud CapEx we're talking about. That's like Microsoft 55, Meta 31, Amazon 54. Those are percentage gains in the number of data centers. David, there's no way that you can route that much electricity to these companies. Not right now. So in other words, you need them to burn cooler. Now, there are a lot of companies that are trying to make it so that they burn cool. But it's going to fail.
I'd love us. One day we've got to get into a data center. Maybe,
I'm working on it. I have it in.
And then go through every single thing that's in there and try and explain to people. Well, can I come or no? That's a bad money.
It's mad money, and I have it.
You won't do it for, you're on this show too. It's an hour long as well.
Well, so is Will Frost. That doesn't mean that we're going to do a data center.
That's not a sufficient answer to that question.
Well, it's a total non sequitur, but I happen to love Wilf.
Yes, Wilf is my co-anchor today on the 10th.
Yes.
Very excited to have Wilf back.
Okay, well, you have Vertiv, which is busy trying to work on this. You've got Dover. You have Eaton. You have Jensen, who cares more about burning hot than... A lot of times when you talk to him, he mentions it very early on, maybe before you can mention it. I think it's important. And you know what, by the way, the gating factors are not how much the hyperscalers are going to spend. They have to.
It's power.
Yeah, because well,
it's also, at some point, the data, there won't be any more data to hoover up.
Agreed. They're going to need video. Video takes a huge amount. David,
video is going to end up
switched to Meta AI. It's really only good for kind of pop culture, like Carl stuff.
Yeah.
Well, Carl knows far more.
Carl's amazing. He has his own AI on pop culture.
He does.
Yeah.
So I've switched back to GPT, but I dabble with Claude. Claude is very good. I call it Reigns.
Yes, of course. This is the beginning of a beautiful friendship.
It sure is.
Yeah.
Just goes to show the growing enthusiasm, guys, not just from hedge funds that are long this stock, most of them are at least, but retail investors as well. There's a lot of excitement, not just around NVIDIA, but I think also CEO Jensen Huang, his passionate remarks about the AI revolution. That's created hype.
Well, but credit to Nelson Young, it's not just growing enthusiasm. He got in so long ago, and he hasn't sold any, which makes me just nervous watching it. Take a little bit off the table, maybe. But also, I hate to say this because these packages are great, and I've been watching them all day. But it also slightly says to me a moment of marking the top, potentially, that we're bringing in the stories of how much money people have made already in this extraordinary trend, and it's just, I don't know, something to keep in mind, I think.
Well, you heard our last guest say it is the market, and that's one reason why we're so focused on those earnings when they come out after the bell on Wednesday. We'll be dealing with it Thursday morning in terms of what we see and what the, again, it comes back to sort of quelling concerns of a demand air pocket if there would be one, as he did last quarter, Jensen, and whether he'll do that again this quarter.
Expectations, to your point, Wolf, are very high going into this report. The company has beat revenue estimates by $2 billion consecutively ever since the July 2023 report. And this morning, Wall Street very positive on the name. Cantor Fitzgerald sees a beat and raise. UBS is expecting NVIDIA to reiterate that Blackwell, its latest graphics processing unit platform, is broadly on track. So they're really downplaying the risk of a delay. And Morgan Stanley naming NVIDIA a top pick ahead of earnings in the stock. You'll see it had that mini drop in early August, but now it's up about 30% since that August 1st low.
The interesting thing as well, jumping out, looking at some of these notes, previewing the earnings, it's back up to sort of 40 times PE. It got down to close to 30 in the early part of August in the market pullback. If you think it can maintain the margins it has, if you think it can maintain some of the growth it has, that can kind of be justified. It's obviously grown into an even higher PE initially over the last couple of years. When they pull out the comparison of the Mag 7, what jumps out to me is how expensive Microsoft and Apple are, which don't have quite such good margins and don't have the same growth profile. Certainly not on the top line for Apple. And they're maybe not 40 times PE, but again, across all these different notes numbers, still like 30 times 12-month forward PE. If you're not really growing that fast, that's pretty striking as well.
I think also why the focus will be not just on the current quarter, but also guidance. That will be in the spotlight for NVIDIA, and any signs that the CapEx from these hyperscalers is starting to fade in the second half of 2024, because of course there's been a big debate about what really is the return on investment of AI. Can these hyperscalers continue to spend as much as they have? And we know hyperscaler spend is strongly correlated with semiconductor sales. That's what Evercore ISI has been talking about this morning.
Yeah, and to your point, I guess Morgan Stanley here, we see guidance 33 to 34 billion revenue number to be range to be unchanged, which would be roughly that $2 billion addition that you discussed, Seema, in terms of guidance.
So again, that the guidance will be key. And also China. There is a report that NVIDIA is working on a specific China chip that appeases the export controls that the U.S. Commerce Department currently has in place. NVIDIA's revenue in China was around 25% of total sales just a couple years ago. Commerce Department reacted with those export controls, and now it's at less than 5%. So curious if this new potential chip they're working on could change that story.
Wow. Even more credit to them that they've lost 20% of their revenue source.
And yet.
They've still ramped as they have. Just a unbelievable story. We look forward to their earnings on Wednesday, and of course all of the reaction live as they cross, but also in the morning on Thursday as well.
So Joe, I'll go to you first. I think this is the question of the moment. The Fed chair gave the markets what it wanted. Will NVIDIA?
So that's the big question right now. And I'm going to tell you candidly, look, for the viewers, for those out there, you're not doing anything this week. You're really sitting on your hands. You're not doing much in the marketplace. You're waiting to hear what the earnings are from NVIDIA, but even more importantly, what's the reaction? Because don't be surprised if you get good earnings and the response to that is poor, or if you get bad earnings and the response to that is solid. The response is the most critical component of the NVIDIA earnings, because it's going to give you what the temperature of the market is right now and how speculators feel about taking on new risk. On Friday, you got exactly what you wanted from the Federal Reserve. You got a little bit of a broadening out. You had small caps that rallied. Now you wait. We're in a period we've got to sit tight over the next couple of days, and it's going to be all about what the response is. The response over the 2 or 3 days following NVIDIA's reports, that's going to set the tone for September.
It's better to debate whether, Sarat, it's still a constructive environment for tech, like large cap tech, like NVIDIA, yes. Right?
Yep, absolutely.
Because that's what Goldman Sachs's prime services team is discussing today in their new note. And we don't hear from them all that often, but they're talking about flows within their space. Their headline today is, can you imagine if NVIDIA beats expectations on Wednesday? Tongue-in-cheek, obviously. Why do they say that? Because technology was net sold, they say, for the 4th straight week, 13 of the last 16, the largest net selling in some 2 months, sold in every region, driven by both long and short. The prime book is now underweight infotech versus the MSCI World Index by almost 10%. It's the lowest level on our record. So big clients lightening up. What are the rest of us supposed to think by that?
Well, I think part of it is rebalancing too, right? You've had such a good run in some of these stocks that have done so well, and if you think about the rest of the stocks haven't done well, so you're just rebalancing to that. You're getting the books, their bond books are also getting bigger if rates are coming down. So I think a lot of that is take some profits, be smart, but I don't think people are getting out. And I think the opportunity there, NVIDIA is going to be very interesting because it's just not going to be what do they see for 2024 and 25, but what is their longer term demand if they can talk to it, because you do have some of their big customers saying we want it, but if they see, it's not just a slippage of Blackwell, it's really the demand and how much they really see it, and I think that could put a floor to some of this outflow.
Okay. And when Microsoft has bounced back, NVIDIA has. NVIDIA to me is the most interesting because this is the first quarter I recall where there's some trepidation about whether they're going to blow it out or not. It was assumed they would for the last quarters, but now with Blackwell and the signals they've been going, it's not so sure. So I don't think you see a major downdraft unless they really blow it. But I don't think that they're also going to surprise meaningfully to the upside.
Yeah, and NVIDIA, it's been really sideways for 2.5 months. That happened also in March, from March for a couple of months after. So it has kind of become tightly coiled, I think you could argue. As to whether it has coattails is a big question, because I do think you now have a little bit more of a sense out there that there's limits to how much credit we want to give for every dollar of CapEx, not for NVIDIA, but for everything associated with it.
Because the market has been broadening, do we think that this holds the same degree of relative importance that it has in the past or not?
It's hard to say. I mean, look, there's 3 stocks that are $10 trillion between, the 3 of them. So it still matters a lot. And I do think that, I've talked about this quite a bit. When you don't have the leadership of the really big names, it's great that it's broad. It's great for stock pickers. I think people like to give a lot of credit to the market when you have the majority of stocks moving, but it doesn't mean it's a safer, more stable market. So I actually think it matters for the index in general if it does well. It's never an all or nothing. Let's be honest. I think we're still talking about 2026, fiscal 2026 numbers for NVIDIA that really holds the key. Those estimates have doubled in the last, 8 or 10 months. So the bar is much higher for NVIDIA itself than it was, let's say, 3 quarters ago.
Look, and now we're talking about NVIDIA, but that's maybe the perfect entree to kind of explain a little bit about what you think these stocks are worth.
Sure. I mean, if you look at the technology, large cap specifically, right, they're trading at incredible multiples, pulling forward earnings for the next several years, right? And now everything's tied to NVIDIA. It was tied to Apple, now NVIDIA is the poster child.
Right.
So everybody's going to be looking for NVIDIA, not only for the growth, but what's the prognosis? What type of growth? Is it going to keep going? Have we hit peak? What's a new Blackwell chip look like?
Mm-hmm.
So now people are going to need justification for the stratosphere that it's in. And if you look at asymmetrical return on this thing, when everybody's focused, everybody's positive, the fall could be a little bit bigger than the upside from here. So we caution why we like the AI stocks. The valuations are really astronomical.
Okay, that makes more sense. So do you hold NVIDIA?
No, we don't.
Okay. Do you think that it's overvalued?
I think it's hard to value these momentum type stocks.
Sure.
What's a reasonable? I mean, we have an investment in Broadcom, Microsoft, Apple, and those type of companies. That being said, how do you value these things when every single quarter they're doubling, tripling revenue, and
Absolutely.
they keep telling you more? But we tell you, as higher you go up in the air, you're starting to lose it. The acceleration upward, it's hard to keep up. And the problem is everybody's predicating their valuations on AI, seems to be on this stock.
Mm-hmm.
So if it disappoints in the progression of where they see things going, watch out a little bit. Then people reevaluate the sector. Still good long term, but these valuations, this momentum, it's a little carried away.
It's almost you evaluate this one from a market cap and not from a PE point of view.
Correct.
Because obviously the PE in retrospect was much lower than we realized at the time. But when you get to be a $3 trillion company and people say you're going to double again, is that literally possible?
Well,
I mean,
anything is possible, especially with how the market is, because there's reality,
Of
right?
course.
It's perception. What are you willing to pay?
Right.
But once you manage risk, if you're actually managing money, right, you're looking at the risk reward. Is it really in your favor buying a full 5% position in NVIDIA at this time? You may dabble in it a little bit, you may start it, but you have to wait. I mean, these things are not giving you much room on the upside.
What price to you, I mean, and maybe it's more of a psychological thing, you know, it's down 30 or 40% from the highs, maybe you go, yeah, it's time to take that 5% stake, but it sounds to me like you're nowhere near that point yet.
Yeah, when I can get predictable earnings, predictable growth rate, when I don't feel like I'm stretching, or when every single analyst is done touting it, makes me a little bit more happy, right? Because you look at it. I mean, when everybody's saying buy something, I sort of feel like somebody in the back room is selling it, a little bit of it. So I think once you get that optimism comes out, and it gives you an opportunity. And we look at it for that way. We look at it for companies that we want to buy in large cap tech. We want some little, not everybody jumping into the bandwagon.
If NVIDIA sells off, Broadcom's going to sell off. That's your buying opportunity.
Mike, would you add anything? I mean, is NVIDIA the tell for the market, much like Apple was, or maybe also still is? Or is its significance, especially maybe around earnings this week, overstated at all?
I don't know if it's overstated just because of the index effect and the fact that it really is a risk appetite trigger one way or the other. I mean, it's very much replaced. So I'm in the camp and always have been that Apple is not really a market bellwether. It's the biggest. It's gone. Sometimes it goes 18 months kind of not doing anything while the market's doing fine and vice versa. It goes on these streaks. But I do think that it's like the Tesla was 3 or 4 years ago, NVIDIA is, which means massive amounts of retail participation, a very widely embraced story, except it's got the crazy profits. To me, the question looking out a little bit farther is capitalism going to allow margins to stay anywhere near where they are for NVIDIA on tens and tens of billions of dollars of incremental CapEx going into years to come? I mean, it's not the way it's supposed to work. We'll see if that plays out, though.
All right. Thanks to both Stephanie Link and Michael Santoli. Stephanie, sit tight because we're going to talk a little bit more about NVIDIA in just a couple of months. Come back to you. At what point does it it's very hard if you've got a stock that has loved you for a long time. You don't want to say goodbye to that lover. You want to hold on to it because it's treated you well. But at some point, we know that the smart thing to do is to gradually reduce the size of that position in your portfolio. At what point does that thinking kick in?
Well, I mean, it all depends on your risk profile. It all depends on how much you're up or not. But I mean, it's hard to lock in a profit. But my good friend Jim Cramer used to tell me never apologize for it. So whether you sell a stock and you made money and it continued to go higher, it's happened to me many times in my career. But I used that money, that extra money, to actually redeploy elsewhere where I thought that there maybe were better values or some hidden gems, maybe not as popular, with powerful stories and fundamentals, of course. So it takes a lot of discipline not to sell, though. It really does.
Then let me personalize it a little bit. And obviously I recognize that you're running money for other people. You have a fiduciary responsibility to those clients. But at what point in a portfolio that you are running do you get to the point where you say, okay, this position has gotten too big? Is it 5%? Is it 15%? Yeah. What is it?
So 5% is usually kind of my threshold, but I have had something like Apple at one point at 9% for the time being, but it will never stay that way. 5% is what I can handle because I only have a 30 stock portfolio, so it's very concentrated.
And now we have another big week because now we need NVIDIA to deliver. Yep. Don't we? I mean, the market's been broadening. Do we need it to deliver?
The market has been broadening, but you still have the S&P's up, 18, while the equal weight, which we added in January, is still barely up 11, right? So you still have a big delta between the stuff that's been broadening and actually the market cap weight. I think that NVIDIA, I'm not surprised it's down today. Who is going to take a new position in NVIDIA after all this hype and all this pomp? And so I think that you have a tiny bit of a sell-off today. But I think NVIDIA's earnings on Wednesday are going to be an incredibly important gauge of sentiment in the market around this trade in general.
I mean, you had your chance kind of at NVIDIA, 20 bucks ago,
right?
$25 ago. And it speaks to the way that a lot of these stocks have rallied back. So now the pressure is really on. You got to live up to the bounce back that we've had. As we said, the Dow hitting a new closing high today.
So NVIDIA is this unique, one-of-a-kind animal. I don't think we've ever had a company of this size. 2 years ago, they had full year full year fiscal revenues of $6 billion. As of last quarter, it was $26 billion. That's up, that's up almost 7 to 6 times. Their stock's up 600% in 2 weeks. So this earnings have actually backed up all of this stock market appreciation. But do I think that NVIDIA is going to go now from 28 billion, which is probably where they come in 28.8 for full year, is going to now go up another 5 or 6 times in revenue? No. I mean, and so they had a step function up. The stock and earnings followed each other, but now you will just see that growth coming down and leveling off. And that's where I say I think this is a lot about sentiment and how people digest slowing growth, albeit huge, moving forward.
You had a Freudian slip there. You said 600% in 2 weeks. I know it feels like that when the stock moves.
Yeah.
I just know people are like, no, not two weeks, 2 years. But your point is well made because it does feel like that.
PE, what matters most here?
For me, I think, honestly, I think NVIDIA. NVIDIA is a huge correlation with how the S&P 500 does. It's more than 6% of the index, so obviously it matters. NVIDIA needs to come in and tell people we can beat and raise, which is the expectation that, hey, that Blackwell scare is really not a big deal. We'll be getting those ships out second half of this year, and that the China sanctions aren't going to be hurting us. So all in, NVIDIA needs to come and be the security blanket. The market needs to rally a little bit more. PCE is key, but it should be in line. I think next Friday's employment is going to be a huge mover because obviously the Fed has shifted their focus from inflation to concerns on the labor market. 4.3% unemployment, that's not great, but the average runs about 5% if you look back long term. So we're still pretty low average unemployment. So for me, I think tech on Wednesday is going to be the market mover this week. I think, personally, I think CrowdStrike should kick off their earnings call with the blue screen of death. I think that would just be kind of funny, but, kind of make a little joke out of obvious things. But everybody wants to know how bad's the litigation, how bad's it going to be, what were the details on how that went wrong. And has that affected any of their annual recurring revenue and their subscriptions? So I think you have a lot of tech movers on this half that will either help validate what's been leading this market or put a little bit of a damper on it. And we could see the value in the small caps kind of continue to regain leadership if we see stumbles from the NVIDIAs.
Okay. And the street is weighing in ahead of the main event as well. Morgan Stanley reiterating the stock as its top pick, while Evercore's analyst says he's a buyer into the print. Meanwhile, UBS writing the whisper number on revenue has, quote, crept up to $33 to $34 billion. And Blackwell commentary might matter more than guidance to investors. Well, Mike Santoli is back with us. And Mike, just want to get your thoughts on this because overall consensus seems to be beat and raise for NVIDIA, which is certainly what we've seen from them in the past, call it, 8-10 quarters. But the expectations do seem pretty high here.
Yeah, I would say that the threshold for really wowing people to the upside probably is pretty high at this point. But, analysts are in the business of identifying and riding fundamental momentum and, demand still outstripping supply. All the inputs I see make the street bullish, and they are very bullish. I think the question is really much more about the durability. How many quarters rolling forward can you really count on this dynamic to stay in place with insatiable demand? We'll see if they have anything to say about that because, it's very common to say, the PE on NVIDIA is lower now than it was a year ago. But that's not really true because a year ago, the forward estimates were like half what they should have been or half what the earnings eventually were. So unless you think numbers right now are radically too low, the stock is more expensive than it was a year ago.
Okay, we'll keep watching hyperscaler CapEx guidance, too. We're watching...
Well, the markets seem to be waiting now for NVIDIA, the tech giant set to report earnings after the close on Wednesday. The stock now up 150% this year, and the chart master thinks it can keep climbing after results on Wednesday. Let's bring in Carter Braxton Worth of Worth B Charting. Carter.
You bet. Let's get right to it. So 5 charts, Tyler. They're all identical, and you'll see it's just different ways to depict the circumstance at hand. So first chart, this is just a 1-year chart of NVIDIA. No lines, no drawings, no judgments. Moving on. Chart number 2. What we know is, of course, that summer sell-off was 35% versus the semis down 30 versus the tech down 20 versus the S&P down 10. But where did it stop? It stopped on trend. That is the actual trend line. The next chart depicts the automated trend line. That's what a moving average is. Of course, it's just automating a trend line process. It stopped to the penny at the 150-day, as it's done repeatedly over the past 12 months. If we put the two together, the last 2 charts, you'll see, of course, they are a direct overlay. The actual trend line, the automated trend line. And finally, last chart. We are just now moving out of this formation. It doesn't matter whether you call it a pennant or a flag. It represents good consolidation. Remember, a 35% sell-off. The stock has bounced off trend. I think you play long into earnings and post-earnings.
Charts look like a bouncing ball that is bouncing higher, right?
Fair enough.
Fair enough, right?
Succinct.
Yep, fair enough. That works for me.
Well, you were looking
Bouncing
for a little
ball.
bit more, I think, from
Have we goodbyed the guest yet?
What?
Have we goodbyed Carter yet?
No,
we talked to
we
Carter?
haven't. He talks too much.
Carter speaks with pictures. He speaks with charts.
Yeah, those are pretty self-explanatory. 5 charts, they're identical, and they can be dead wrong. Maybe it drops 20%. Identical move is 10. We shall see.
Bounce, higher, bounce, right? That's what it is. All right, Carter, thanks. Mike Coe, what are the options markets saying about NVIDIA right now?
Well, you said it, Tyler. You were talking about bouncing, and right now the options market's implying that the stock could move a little over 10% by the end of the week. And I would point out, 1-month options right now are the highest they've been priced ahead of any earnings, including the last 8. So this is at the highest valuation, and so the volatility and the movement in the market we're expecting is as large as it has ever been for this stock, or frankly, any stock. And the busiest contract today was the August 30th expiration. So we're talking about the week ending 1:30 strike calls. Almost 120,000 of those, representing 12 million shares traded for about $6.20 a contract. Calls have been outpacing puts on average over the course of the last 20 trading days. So options traders are betting on volatility, but they're still leaning long.
All right. Thank you, Mike, very much. Dan, let's talk it through a little bit.
Yeah, I mean, listen, I think it's about expectations. I think the way, Carter is mapping it out, it makes perfect sense. But, sooner or later, there's going to be a quarter where guidance doesn't come in where these lofty expectations are. They've already told us a little bit about the push out of this Blackwell. So, again, I think a lot of investors are going to want to hear about that and how that affects future guidance.
Guy?
10% move, and it's a $320 billion move. I think there are only 45 companies in the world that have a market cap that big in the first place. And we throw these numbers around like they're not a big deal. I think it is a big deal. I think it's going to come down to margins. Guidance, EPS will be fine, guidance will be fine. It's margins. If margins decrease more than the street's looking for, I think operating margins 66%. That's going to be what I think the street is focused on, and that's why the stock, I think, can be vulnerable to the downside.
I think the stock is slowly growing into, you could say, growing into the valuation, or actually outgrowing the valuation. But what I mean is, if you look at the first quarter, year over year, we had 460% EPS growth. Second quarter, the expectation is 137%. We already know that at least the street's somewhere around 75 to 80% earnings growth for the third quarter. So we know what's going on with the expectations. They're coming in. They're coming into a place where I think they can be more reasonable. I think people are looking for an opportunity to buy this stock. What happened both August 5th, and some of the dynamics just around market volatility are a function of how crowded this trade is. Everybody's talked about the pent-up volatility here, but I think people are looking to buy the weakness here, unless there's something that we are not going to get in a day and a half at this point. It's something I think the market is actually willing to live with.
Courtney, you're nodding a little bit there.
Yeah, and NVIDIA is not going anywhere, right? And I think the question is, are their earnings going to continue to accelerate as fast as they have been? And that bar does keep getting higher. And I think that is the question: is that they're going to have decelerator earnings, and you're having these other areas of the market that are accelerating. At what point do investors start to shift from those into those better valuations? And I don't think that's happening quite yet, but I do think it's something you want to be cognizant of. I wouldn't chase it. I wouldn't be overweight currently. But if you own it, absolutely hold on to it. It's not going anywhere in the near future.
If you've owned it, chances are you're overweighted.
Pretty much
right?
everyone owns it at this point.
Yeah, right. Okay.
All right, I hope you're all having a great day and staying calm in this market as we prepare for what is arguably the most important earnings report of this quarter. The S&P finished the day down roughly 0.3%, and NVIDIA closed the day down around 2.2%. As I've said in recent videos, I'm not going to put too much weight behind technical analysis of NVIDIA between now and earnings, because at this point the time is so short that anything could happen. And as I mentioned in Saturday's video, I would not be surprised if NVIDIA trades relatively flat between now and earnings. My reasoning for this is simple. Not many people want to bet against NVIDIA ahead of earnings, as that has not worked out well in recent quarters. And at the same time, I don't think many market participants are dying to buy into NVIDIA before we get earnings, guidance, and clarity on the situation surrounding Blackwell. And looking at NVIDIA's chart, I think the price action that we've seen over the last week or so is a clear depiction of this temporary stagnation ahead of earnings, because we have been battling with this trend line without any strong breakouts to the upside or the downside. For now, I think we are in a short-term waiting period. Now regarding NVIDIA's earnings, I have no idea what the future holds and I could be completely wrong. With that in mind, I think NVIDIA will report a great quarter. The real question is whether or not NVIDIA raises forward-looking guidance and what is going on with Blackwell. Now I think it's important to remember that all of the hyperscalers said at their most recent earnings releases that they all intend to increase CapEx spending on AI by billions of dollars. Additionally, we saw AMD increase their guidance for chip revenue through the rest of this year. So all signs point to growing demand, and therefore I think NVIDIA is likely to guide higher for future quarters. The ideal, best case, perfect scenario for NVIDIA earnings would be that they beat on revenue and EPS, guide higher on revenue next quarter by billions of dollars, calm concerns about Blackwell, and say that Blackwell is still on track, announce that new China-friendly chips will be for sale soon, announce an increase to the cash dividend, and announce a share buyback. That would be the ideal picture-perfect scenario for NVIDIA earnings in my opinion. Now in reality, I don't know if we will get all of that. Ultimately, though, I think that if NVIDIA can raise forward-looking guidance higher than expectations and calm concerns about a potential delay in Blackwell, then the stock likely moves higher following earnings. Those are the two most important topics in my opinion, guidance and Blackwell. So that is what I'm thinking about NVIDIA in the short term. Long term, though, I am bullish on the future of NVIDIA as hyperscalers increase CapEx by billions of dollars. Yes, at some point the rate of growth will likely slow, as this is a recurring trend whenever there is a new breakthrough technological advancement. For right now, though, demand is strong, as the largest companies in the world are practically waiting at NVIDIA's doorstep for the latest release of their products. Tech giants simply cannot afford to be late on AI, or else their competitors will quickly outpace them. So with all of this in mind, I think it is likely that we get at least one more year of both strong growth in NVIDIA and a maintaining of the current multiple, or possibly even an expansion of the multiple. A year from now, who knows what market participants will think of NVIDIA's multiple, and who knows whether growth will still be accelerating. For now, though, demand is strong, hyperscalers are increasing CapEx by billions, China-friendly chips are likely on the way, Blackwell is on the horizon, and NVIDIA has so much cash that they could increase the cash dividend or even authorize a share buyback if they wanted to. So I think at least for the next 1 to 2 years, things are looking good for NVIDIA. In the short term, I have no idea what to expect because anything could happen. From a longer term perspective, though, I think NVIDIA has brighter days ahead. At least that's how I view the situation. With all of that being said, I hope you're all having a great start to the week, and I'm curious to hear your thoughts about NVIDIA in the comments below. Please leave a like on this video so more people will see it. And while you're down there, please consider subscribing. It's free, and you can always change your mind. Thanks for watching, and hopefully I'll see you in the next video.